Conley, want to get your thoughts on this peace deal that we're potentially going to get here come Friday between the U.S. and Iran and what that's triggering for the markets here.
Overall, it's a positive development because, as you know, the world is aware of a time running out in terms of having that strait open and inventories running out for petroleum products. So I think the timing, of course, is welcome, and that's why we're seeing markets rally. You know, whether all parties are satisfied with the resolution is probably less important to markets, and what's more important is that the world economy is not going to suffer from petroleum shortages.
Steve, it was interesting to me, John Kilduff at the top of the hour was saying that he actually thinks oil is going to move back towards the 60s much faster once the Strait of Hormuz gets opening here. That's different than what we've heard from a number of folks over the last couple of months about this idea of higher for longer.
Yeah, I've always been bearish on oil. We were in an oversupplied state going into the Iran conflict, and we will return to that oversupplied state. USA is the biggest producer, and I think the fact that we couldn't trade above 120 and we have fallen so precipitously, we could be looking at oil in the 60s range. If you look at the forward months, Morgan, that really tells the story. And we started off around 65, traded at 120, back down to 80. I think it's going to shock a lot of people, and that changes the calculus for the Fed dramatically.
All right, we are going to get to that here in just a second. But first, Dan Ives, I mean, NASDAQ leading the charge pre-market this morning. You talk about risk on. It's semi-stocks and other AI names that are surging the most right now.
Look, Friday was a Goldilocks day because the thing about coming in, the bears, yelling fire in a crowd theater, that SpaceX is going to take the oxygen out of the tech stocks, liquidity. Look what happened. It was like watching Brunson and the Knicks game 5. So I think this is a bright green light to own chips, to own tech. And I think this is a huge sort of signal that we're seeing in terms of the appetite for broader tech, especially what we saw with SpaceX, but the ripple effect that's going to take place here.
I want to get into SpaceX more in just a moment. First, though, Tom, your thoughts on what a takedown in geopolitical risk premium means as we see crude oil fall, as we see treasury yields fall, what it's going to mean for the setup for FOMC, given the fact that many of the officials were leaning a little more hawkish coming into this meeting, but of course we got a new Fed chair.
I mean, the market's going to test Kevin Warsh on his views this week. But I do think if he was in the camp that we can treat this inflation surge driven by oil as transitory, I mean, not the best word, as temporary, and therefore he could lean dovish, I think there is going to be more room for markets to interpret his statements that way. So I think he's going to come into this week with tailwinds and the possibility that, his agenda could be something the market respects. I think it's actually quite bullish for the FOMC.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.